Kaspar, welcome back. You had a nice couple of weeks of holiday, which you deserved. Today, we are not going to talk about CrowdStrike that might be coming back up. We're not going to talk about the payrolls that were adjusted. We're not going to talk about the Jerome Powell that's coming out tomorrow. We're going to talk about.
He's coming out.
Well, he's coming out. He's coming out with the final interest rate decision for. Is it going to be two? Steps down of 0.25, or it's going to be one, or whatever it's going to do. Maybe it's not going to do anything at all. People are anxiously looking at tomorrow evening when the decision will be brought. We're going to talk about Colombia. And why are we going to talk about Colombia?
Because I was there on holiday.
Exactly.
No, that's not because I was there.
You were
on
there?
Holiday? Yeah.
And I thought, we could talk about all these topics, but I think it's nice to also have a look at something else for once in a while. We do this vlog for a couple of years, and I think this is something that we haven't touched on. So tell us a little bit about your holiday if you want, and tell us a little bit about the economy, and I will show you then afterwards how you can invest in that economy.
I will. Thank you, Martin. And I think during my holidays, market went down and then they went up a little bit.
Yes.
And you, in our previous vlogs, you talked about what was going on in the market. And I have a lot of investors a little bit negative. So we tried, now, what you said, the markets are a little bit more stable. We talk about, and we love to talk about sectors, or we love to talk about certain products where you can invest in baskets. And this is also like a basket, because we are talking about Colombia as a basket where you can, if you believe in it, you can invest in.
Exactly.
I was in Colombia. I traveled there for more than 2 weeks. I went to Medellin. I went to Cartagena. I went to an island in the north. I went to in the middle of below Medellin to the coffee region. And I think that you recognize, if you are in a certain place in the world where you haven't been before, that you see, okay, now this is, I don't believe in this place. I don't like the people, and they're not and maybe not that smart, or not that friendly. But you can also have places where you think, now, wow, there's a lot of potential. And I think everybody knows that the economy, that Colombia is not the most, is not the biggest country of the Western world. But it has, I think, what I experienced, it has a lot of potential. And why did I experience it? Because you see, for example, I took some inland flights, and within those airports, everything was well arranged. The processes were in place. The planes were really new, more new than in Europe. The flights, they took off in time. The metro, what I was in, was well arranged. So I think. And that, of course, the government has a lot of impact in those projects.
Of course.
Mainly all the impact. So the government, I think, and that you also see in how the country developed over the last 20 years, what I understood. But also the people itself. There are a lot of small entrepreneurs. There are a lot of micro economies, but a lot of they felt for me the word as smart. They were smart people. Yeah. If you look at so that's why we said together, okay, let's make a little bit deep dive in the country, because a lot of people, they have investments in certain regions. For example, they buy the S&P 500, they have the biggest 500 companies of the US. Some people they live in Belgium and they buy the Belgian market. And those countries like Colombia you don't see that often in portfolios. And what we always do, we give you information, and based on the information, you decide, is it worthwhile investing or not, or you follow it, whatever you want to do with it. The country, we are in Spain, and Spain has the same amount of inhabitants as Colombia, 50-something million, 52 million. The GDP is a little bit less than Spain. It's not even 400 billion dollars. But if you look at the GDP PPP, and it stands for purchasing power parity, that's then so what can you do with the money? Then it's much higher. Then it's more than $1 trillion. So you look at the GDP per capita, and then it's 7,500 net. But if you look at to the GDP per capita PPP, maybe sorry for using so much peace. Then it's almost 20,000, and of course that's an average, and the median is a little bit different in those countries. Third largest economy in America, still of course a lot of poverty, but in the last 20 years and a little bit more, the poverty levels were high, 65% in 1990, and now they are low in the 20s. So especially the last 20 years, they made a big development in a positive way. But 54% of Colombian families, they are food insecure. So that's a lot. That's a huge figure. 500,000 children of the age under 5 are undernourished, and also the welfare state is not that well developed. 5 million people have the pension. Are
government.
No. They are the age of going with pension. I said, but
retirement.
But only 1 million gets a pension because you see a lot of older people are still working. Unfortunately, inflation was 9% this year, 7%. Last year 9%, this year 7%. But before the high inflation rates worldwide, it was only 3%, and so now around 7% inflation for this year. But the interest rates are higher at 11%, so that's good. That's the opposite of Europe. We have inflation rates, whatever it is, which come to 4 or 5%, and interest rates of 2%.
Yeah.
So that's something. They export a lot. They produce a lot. I think that's also good for an economy if you produce something. 45% is petroleum, what they export. Manufacturing 12%, and coffee. And was really interesting to see how the whole process is about the coffee. And it is 4 billion on a yearly basis. And then the number 3 in the world. 10% of all the coffee that you drink is coming from Colombia. And the fast-growing IT industry. And so I think this is a great combination by new economy, IT development, and with the old economy, what it produces. And I think that's a really good combination. And the largest shipping building industries outside Asia. And a lot of, it's an open market since 10, 20 years, but the agriculture is still really protected. And I think that's good. And I spoke with a lot of people about the coffee. The coffee producers, they are families, and they have a little surface where they plant their plants. But they are working with corporations, and the bigger ones, they sell directly, they export it directly. But like Nestle can't buy those companies. That's well protected. So I think still a lot of poverty. But better than 20 years ago, much better. High potential, I think, because of the people and also what the government is doing. And if you look at the country as a whole, as a how big is the debt, because that's really important, of course. Only 54% related to GDP, and that's not a lot.
That's not a lot.
So they have some buffer.
That's half of what France is having at the moment.
Yeah, and also Japan doesn't have that buffer. Or Italy, or Greece, or
exactly.
Portugal, or Spain, or France.
And talking about that debt, you can buy that debt, or you can invest in that debt. You can buy a government bond of the Republic of Colombia, and that is actually, if you look at it from just like the perspective of an investment, it gives you 4% interest. So you're investing in a country with a 54% debt. The rating of this bond is BB, so it's just slightly below investment grade. Investment grade is very stable, so you're almost 100% sure, never 100% sure, but that you will get your money back. The effective yield of this bond is what I said, 4.1% approximately. It redeems in March 2026, so it's for a year and a half. So if in a year and a half Colombia still exists, big chance that you get your money back. If they have to raise the government debt, they're only at 54%, so they might be able to do that. So pretty interesting to have a look at this bond. We'll put the screenshot in there.
And it's in euros.
And it's in euros, yes.
So you don't, not in pesos.
No, not in pesos. Then if you want to invest in the country-brand stocks, in the companies, because you think what Kaspar is saying, IT, all this sort of sectors that are developing really rapidly, you could also buy the iShares MSCI Emerging Markets Latin America ETF. You pay 0.2% costs on an annual basis to iShares to make the index, to follow the index. There's 341 million euros in this ETF, 92 companies, and the top 10 is investing in financial companies from Brazil, also material companies. Another big bank is in here. Petrobras, of course, the big Brazilian, but 20% exposure also to Colombia. So you're pretty well invested in Colombia with this ETF. If you want to have an ETF that purely invests in Colombia and you don't have the professional investment status, then you could probably also consider, if you're willing to take the risk, to buy a CFD on global MSCI Colombia. If you don't believe in Colombia, you can also short it because a CFD you can buy and a CFD you can sell. So
do your homework before you buy a CFD.
Yeah, exactly. A CFD is of course, it's a leveraged product. It's a contract for the difference. So you're not investing really. You'll get a settlement. You will get your price is calculated based on the difference from opening the position until you close it. So, do your homework. And if you don't feel comfortable about that product, never go in it because you might come home from a bad experience. So I think that was something else, something we never talked about before. Colombia, beautiful country, on my list also to go there. And thank you, Kaspar, for sharing this information with us today. And if you want to know more, please let us know.
Give us your thumb. See you next week.